Listen to me, because what I am about to tell you could save you thousands of dollars every single year in retirement. When you turn 65 and enroll in Medicare, you think your health insurance costs are set in stone. You think, I worked hard my entire life, I paid into the system, and now my Medicare Part B and Part D premiums are standard. But then, out of nowhere, you open your mailbox and get a letter from the Social Security Administration telling you that your Medicare premiums are going up. Not by a little bit, but by hundreds or even thousands of dollars extra every single month. It makes you feel furious, confused, and downright scared because you are on a fixed income, and nobody warned you about this quiet wealth trap. That surprise cost is called IRMAA, the Income-Related Monthly Adjustment Amount. It is a surcharge tacked onto your Medicare Part B and Part D premiums if the government decides you earn too much. And here's where people get caught completely off guard. The government looks at your tax return from 2 years ago. So when you enter Medicare in 2026, they are judging your income based on what you made in 2024. You might say, Susie, in 2024 I was still working. I was making a great salary. But today I am retired, my paycheck stopped, so why am I being penalized today for money I made 2 years ago? That fear of losing control over your hard-earned retirement nest egg is real, but I want you to stand in your financial power right now, because you can avoid or eliminate this surcharge if you know the rules. First, understand how IRMAA works. It is built on strict cliff brackets. If your modified adjusted gross income, your MAGI, is even $1 over the threshold, you don't just pay a tiny penalty on that $1. You get bumped into a whole new tier, spiking your monthly premiums instantly. And guess what goes into that MAGI calculation? It isn't just your ordinary income. It includes taxable Social Security benefits, traditional IRA and 401k withdrawals, capital gains from selling stock or a home, and even tax-exempt municipal bond interest. So how do you fight back and protect your cash flow? Here are the actionable steps you need to take right now. Action step number 1, if you recently retired or had your income drop, file Form SSA-44 immediately. The Social Security Administration calls this appealing due to a life-changing event. If you stopped working, reduced your work hours, got divorced, lost a pension, or lost a spouse, the government cannot hold your income from 2 years ago against you. You fill out Form SSA-44, attach proof like a letter from your former employer or tax returns showing your current reduced income, and ask them to recalculate your premium based on what you actually make today. Thousands of retirees overpay simply because they don't know this form exists. Action step number 2, master the timing of your Roth conversions. Converting traditional IRA dollars to a Roth IRA is a brilliant tax strategy, but if you do a massive Roth conversion at age 63 or 64, you spike your MAGI right as the 2-year Medicare lookback kicks in. Do your heavy Roth conversions before age 63, or space them out in smaller, calculated amounts so you stay safely below the IRMAA brackets. Action step number 3, if you are 70 and a half or older, use qualified charitable distributions, or QCDs. When required minimum distributions, RMDs, kick in, taking those mandatory withdrawals forces extra taxable income into your tax return, pushing you right over the IRMAA cliffs. Instead of taking the cash and donating later, send your donation directly from your traditional IRA to a qualified charity. That money satisfies your RMD requirement, but it never shows up in your adjusted gross income. It keeps your income low and keeps IRMAA off your back. Action step number 4, pull your retirement income strategically from tax-free sources. Withdrawals from a Roth IRA or a health savings account used for qualified medical expenses do not count toward your MAGI calculation. If you need extra cash in a given year to buy a car or remodel your home, don't pull it all from a traditional IRA where every penny increases your Medicare cost. Blend your withdrawals between taxable and tax-free accounts to control your bottom line. My friends, money is a tool for your peace of mind, especially in retirement. Do not let hidden surcharges eat away at what you worked decades to build. Take control of your MAGI, plan your withdrawals 2 years in advance, and if your circumstances changed, get Form SSA-44 submitted today. You deserve to keep every dollar you earned.